Okay, can everyone hear me? And can you see my screen? Yes, 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 yes. Okay, all right, great. So let's get started. This is Bruce from Traders for Traders in New York City, and just kind of briefly go over who we are. And uh, um, okay, yeah, at Traders for Traders, basically, what we do here is we're an educational company providing professional trading methodologies that are used in the banks and financial institutions. Okay, and first need to go over the disclaimer here. The U.S. government required disclaimer: commodity futures trading commissions. Futures and options trading has large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in Forex futures and options markets. Don't trade with money you can't afford to lose. This is neither a solicitation nor an offer to buy, sell Forex, futures, stocks, or options on the same. No representation is being made that can occur that any account will or is likely to achieve profits or loss similar to those discussed in this presentation. Past performance of any trading system or methodology is not necessarily indicative of future results. And then you can see also the CFTC rule 4.41 about hypothetical and simulated performances. Okay, a little bit history about Traders for Traders and myself. Traders for Traders was established in 2009 by Brad Gilbert, and Brad Gilbert has quite a bit of trading experience from the professional side. He's a former market maker and bank trader for such institutions such as Citibank, Commonwealth Bank of Australia, and Toronto Dominion Securities. He'd been trading for over 20 years. Basically, our goal here with T4T is to trade. We are traders, but we want to help other retail traders by offering professional educational services found in the banks. Okay, and this job is rather easy for Brad. He's when he retired from the banks, he found it rather easy training other traders because that was part of his job in the banks to train the junior traders as well as managing the trading desks, making markets and trading for the banks and their clients. Okay, so basically Brad trained me and I was fortunate enough to be brought into the team in October of 2012, and since then developed into a senior trader and the chief operating officer. Basically, Brad said that I was rather easy to train and wanted to make me a part of the team, and very fortunate for that. I'm an NFA associate member, Forex associated person with Series 3, 30, and 34. Okay. Let's get on to the presentation here. This is about scalping and hazardous if you're unplanned. Okay. And we'll get on here first with a definition of scalping and what exactly is it. And it's a legitimate method for trading based on quick momentum trades triggered by order flow setups. Now, this is more or less the kind of definition from the professional side. Okay. In the real market, this is called jobbing. It's called jobbing the market. And we'll get into an example here. So how do the bankers job the market? Well, basically, they're front running their customers. Okay, now that doesn't mean they're front running, us retail traders, but they'll be front running some of the other customers, like the corporations. Okay, so this is a very contentious issue and very topical at the moment. This has been in the press just recently. Michael Lewis, I'm sure you guys are aware, has just come out with a new book called Flash Boys, and talks about front running in the stock markets here in the United States with all the algorithms and algo traders. Okay, and basically it's defined somehow with the technology that's legal somehow, but that seems to be the case. However, we know though that front running in the equities market, if you front run, you go to jail. Okay. Now, in front running in the Forex market, now in this example, I'll show you. Basically, this was defined as managing the client flows. So it was pervasive in the Forex market, and it had needed its own terminology to redefine it. Okay, and here's how it works. Okay, the corporations place orders to sell $200 million of euro at 138 the figure. Okay, and then the banker, he'll see that order on his desk, and then he will get in front of it, and he will sell $100 million at 137.95 to 137.98. He may or may not. He'll sell up to maybe 100 million. And look to just get a few points out of this. He may average in at that 137.95 to 98 level. Okay, then he's trying to buy them back maybe 5 points lower. Okay, so he has a distinct advantage here because he can lean on the orders that are above him. He knows that there's $200 million up there. And he can get in front of it, get a few points out of it, let it come back up, maybe get a few more points out of it, and he may do this 2 or 3 times. Okay, so it's a very risky game to play though, but he's willing to do it. The reason being, if it shoots through the 138 level, then basically he'll be out for the day. He may lose 2 to 3 points, and lose $20,000-$30,000, and he'll be done. Okay, but if he can job the market successfully, he can easily make somewhere between 50,000 and 150,000. Okay, so he's willing to do that and take those risks. The key here is that he has the orders above to lean on. Okay, and that's comes with a caveat though, basically, he needs to know if those orders are real or not. They haven't been filled yet. So if price comes up to the 138 level or close to it, and then those orders are pulled, the banker's screwed. Okay, price is going to rip through there and continue on, and he's going to be selling in a frenzy to get out. Or buying back in a frenzy to get out. Bankers are very aware of this, and what they will do to kind of counteract some of that risk is maybe they'll be averaging in. Okay, so they'll be averaging in over that range, maybe of 2 or 3 points there, the 95 to 98 levels. Or he may not be completely fully short with 100 million. It might be somewhere between 30 and 50 million. And so if it does turn around and goes against him, he can easily cover and then also go long. Okay, and that's he can easily make his money back off of that if that does happen. Okay, and that does happen quite a bit. A lot of those orders up there can be from hedge funds knowingly getting the banker short. Okay, and that's the game. That's what they play. And now let's get into what this means for us. Okay, and I see you guys have some questions already, and I'll get to some of these questions later after the presentation. All right. Okay, so what's the problem for scalpers? And we, from the retail side, we're considered scalpers. Okay, we're trying to basically act like the market makers, but we have a distinct disadvantage. Okay, we don't have any orders to lean on. We can't see the order flow like that. Okay, and we don't have access to kind of depth of money that the banker has as well. Okay, so what that means is that we're risking that quite a bit. And if we don't know where the orders are, then we have quite a bit of risk on. We have no plan here, and without any kind of capital management plan, which we know this is the most important aspect of any trading system. If we don't have that, you're basically a sitting duck. Okay. The risk reward here for scalpers is also kind of turned upside down, and this definitely puts us at an example here with 3-to-1 might be the risk that you're putting on is 3 to get 1, and that doesn't really help us out at all. It's usually turned around where we're trying to get risk 1 and get 3. Okay, so that makes our job a lot tougher, and what that leads to is invariably small wins and large drawdowns, and that will basically put us in a hole, dig us into a hole, and keep us there. All right, so it's a very risky strategy, and you really have to have your wits about you, and your emotions about you, and you need to develop a plan. All right, so we'll get to that right now. So how do we do this? All right, the fundamentals provide the answers. Okay, it determines if we're going to be a buyer or a seller, and that's what we're looking for here. So, for example, if the RBA, Reserve Bank of Australia, comes out and there was a bias for them to cut rates, but they don't. They decide to stand neutral. Well, then that's basically going to act like a rate hike, okay? And at that point, it gives us clear direction. We want to be a buyer, okay? And so now we're banking on the side of these fundamentals to go long, okay? So planning for the jobbing, scalping the market, basically we need to know what side we're going to be trading from, okay? And then we're looking for the fundamental directions here, and then we're looking for technical levels for entry. Okay, we're looking for technical entry levels with the trend lines. That's the way we do it with at Traders for Traders. Okay, and we need a clear bias to job the market because we don't have any orders to phone home. Okay, so what that means is precise entries are key here. That's what we're looking for. And we don't want to be trading mid-range. We have to be patient and very tight with our capital management, which makes it even harder for us because the capital management, you have to be very, very disciplined, and you can get very emotional here, risking just a few points or risking it is just a few points, but you're only gaining a few points as well, and your emotions start to flow all over the place. Okay, so basically, what that means is no mid-range trading. Okay, when there's no sort of clear direction here, we want to stay out of the markets. All right, so you can see here we have the trend lines here. We have a resistance line to the top side and support line to the downside there. And price is in the mid-range here. There's no kind of clear direction. This is higher risk. This is what we want to stay away from. All right. But when price does come close to the trend lines, and you can see here we are clearly in an uptrend, this is where we have opportunities. And this is where we can job the market. We have a clear uptrend. We probably have some fundamentals on the back of that. And then we can see here, let me get the pen out just a moment here. Okay. We can see here that when price comes down to the trend line and price comes down close again here, you're looking to get in, looking to take a few points out up here. You're looking to get back in maybe down here, looking to get out up here. You're looking to get in here and then and get out back in at the top of the range here. Okay, so you can see here that your risk to reward levels are not very good. it's going to be down here below the trend line, and you're looking to gain a few points and then get out. Okay, you can see another opportunities here down at the trend lines here. Now this is an hour chart. Okay, and bankers basically look at the daily and the hourly chart. They're not drilling down to smaller time frames. And you can see again a couple opportunities here to get in and then get out up here. Now, where this changes with the technicals is when the support line turns into a resistance. So we see a break here of the support line. Now that turns into resistance, and we're looking for opportunities to go short. Okay, so back up to the trend line, you're going short, and you're looking to gain a few points, and then you're looking again to go short at these levels up here, and then get out again. Okay, so that's basically what you're looking to do, and you're looking to do this several times a day. Okay, this is something that brings up the point here that we don't really a lot of times it's very difficult to scalp because of the risk reward ratios. Whereas if you kind of sit back and wait for the better opportunity, you can see more points, and you can also put on a little more risk because your reward is going to be so much greater. All right, so let's get rid of that and back to the slideshow. Okay, so following the news is very, very important here. This is the key. All right, and this is where we want to look at a bunch of different factors to determine our fundamental direction, and this is what we're going to be leaning on for the whole strategy. The economic news in real time. We have the economic reports coming out, like retail sales, CPI. Those give us clear direction if there's good variance between what's expected and what the outcome is. Okay. Then also news in the marketplace, and to gauge geopolitical understanding and market sentiment will give us clear direction as well. We also want to take a look at how the other markets are behaving and look at some of the correlations there. Also, take a look at the dollar and how that is behaving in terms of with market correlations. And then again, back to the technicals, and those are our entry points, and that's what we're looking for. All right, that's the plan here. Here's an example of a clear direction from the economic releases. Okay, here we have the UK retail sales data. We can see some very, very clear numbers out from, let me get the pen up again here. Clear numbers here from the month over month. This is what came out. This was expected. We see massive variance. This is an opportunity to go long. We see again here, we see the year over year. Massive variance. This is outside expectations, and what that means is you have opportunities to go long. You are a buyer. Okay, so that's what you're looking for. You're playing it from the long side. Okay, and in the end, though, we need to control the risk. That's what's crucial here, and that's what will make or break the whole strategy. All right, so trading from the side of strength is what allows us to control that risk. We're not trying to job the market from both sides. We're not trying to job the market going long and then turning around and going short. Okay, that's what leads to disaster, because now we basically, our plan is saying we're looking for the fundamentals. And we're looking to the initial position needs to be that from that side that we're most confident with, that gives us that direction, the fundamentals, and also the technicals. Okay, so that way, if we're not looking to put on the risk, so that if we're going long, we don't turn around, take our money, and then go short. Okay, because if we're not trading from the side of strength, potential for losing money is much greater, and that's what we want to avoid. Okay, Here's an example, euro dollar. You can see the downward sloping trend line there, a resistance. And price comes back up several times here. And yeah, you can see up here, you're looking to get in and take a few points and get out. You can see several examples here. Price comes up for several hours into this area. And you can job the market for several points throughout, and again here, and here, and continue to take your points out. You can see that I mean, this does add up. If you're taking somewhere around 10 points each trade, this can be significant. However, you can also see in this example that if you wait for the good opportunity over here, then you don't have to sit here in front of your screens all day long. Trade the good opportunity, get your points, and get out of the market. Okay, but that's what the strategy is, and we'll take another look at another example here. Yeah, lots of selling opportunities, and then here's the Aussie. We see uptrend. And there's several opportunities there, very much at the end here. I don't know if you guys can see my arrow. There's several opportunities there to, we see 1, 2, and now 3 bounces off the trend line. And just get long, get some points out of it, wait for it to pull back, get long again, and that's it. You're playing from the long side. Okay. Now, this is a very unique example, and this is probably where scalping is most likely the only example that or strategy that you can employ. This is where this some years ago, when this Swiss National Bank initiated the pegging their currency to the euro at 120. Okay, so anytime that basically you're a buyer of Euro Swiss, anytime you see opportunity down at the 120 level, you're a buyer and you're getting in, and then you're looking to exit above. Okay, you're not looking to go short up there because you can see some of those massive spikes. Those are some stop runs and short squeezes there. People just getting annihilated, and you want to avoid those. But you can see if you're a buyer in this example, there's several opportunities to get in and take some cash out of the market. Okay, and this went on for several months. So that's Euro Swiss. Play it from the long side, and the key here is coming back to the capital management and the emotions that scalping involves. Okay, because there's a lot going on here. Your emotions start to flow all over the place, and you want to avoid that. You've got to break your old habits. Okay, you don't have the orders to lean on that the market makers do in the banks. Okay, they can clearly see where the orders lay, and they can play off of that. Okay, but for us, this could lead to potential over trading, and that's what we definitely want to avoid, and getting caught up emotionally within that. Okay, so that's why implementing the plan can be challenging and difficult because of the emotions. All right, and you're looking to take small gains, but you might have several losses as well. Okay, and that's where you have the bad capital management, and that's where you can have a meltdown. All right, and that's where the confusion starts to set in. Maybe you start moving your stops, you're over trading. You're getting emotional, and the capital management with the small gains and large losses starts to set in, and basically with no control and no discipline, then you're going to explode. All right. So going back to the plan, when to trade the markets is key. All right. So we need the clear direction. All right. We go with the fundamental direction, and then we look for pullbacks to the technical areas for entry. And that's the plan. So get your technicals all lined up and ready, and then you got to keep your eye on the news, and definitely hone the skills for scalping. All right, I think that's it, guys. What any kind of questions out there? Let's take a look. Let's see. High frequency trading. Let's see. There's 20 lots on retail. Definition right. Yeah, Swag King. Yeah. Not the greatest public speaker. Let's see. Spreads considerations. Yeah, that Nico, that's a great point. Absolutely. This makes it a very, very challenging strategy because you're paying the spread each time, right? And you're only trying to get a few points anyway. So that adds up. You really need to get a really good feed, really good broker with very low spreads and quick execution. All right, that'll make the job much easier for scalping. That would be key for any markets, regardless of Forex. Okay, let's see. Yes, we're using stochastics, and you can add that into the strategy as well. But basically, the clarity that you're looking for with the stochastic, Sanjay, or it is not really stochastics. You're looking for the clarity with the fundamental direction, and then pull back to a technical area. Okay, not necessarily dictated by the indicator. All right, let's see. Hard to know how far a candle will move. Maybe you're talking, I guess, Forex Gal about the some of the examples there in the chart. Yeah, that's probably the case. It's again, that's an hour chart, but you're looking for those areas, technical areas that have some significance. Okay, so that's why you don't drill down to somewhere with the 1 minute or 5 minute chart, because those aren't significant levels of support and resistance. Okay. Let's see. Any view about gold? Not really. I don't think there's any kind of clear direction on gold right now. So I would definitely stay away. Yeah, Jim, timeframes, I would stick with the 1 hour on that. Let's see, show us some setups. Brad, yeah, I went through some of those examples. I don't know if that was enough for you. Let's see, do you trade manually or with an EA from Forex Gal? Yeah, manually. We're looking for pullbacks and then just making the decision to get in. Okay, Ian, let's see here. How do you enter a trade at market or place an order? Yeah, I mean, usually, I mean, you can put a pending order in there, but usually it's market order. You see a pullback and you decide, okay, I'm getting in now, and take it from there. Okay. How long is time-wise you consider a scalp versus a short-term trade? Well, it really depends time-wise. It depends on what's going on in the market. Sometimes you can be in and out of these rather quickly as price comes back up and tests those areas of support or resistance. Okay. Other times, market might just be crawling. And still, though, the opportunities are there. It's just doesn't happen as quickly. Okay, let's see, David. What has been holding the euro in a tight range lately? Well, that's because we have ECB rate statement and press conference tomorrow. That's what everyone's waiting for, David. And also, too, this has been a really volatile period, trading, very, very difficult, I think, because not only do we have a whole bunch of stuff going on with some of the news. This is a big week for news, lots of news coming out, and everyone's holding off for the ECB press conference, see what Draghi's going to do. And then also, too, we have non-farm on Friday. And then we also have the two geopolitical events that are affecting the markets and whipping them all around. One is what's going on with Crimea and the situation over there. And how is that going to relate to the markets? And then also we have the this whole emerging market theme starting to that's been unraveling for a while now. We saw that started with the weakness in China, and now that situation has changed though a bit. So now we're starting to see something kind of interesting happen. Whereas the emerging markets were just getting slammed in some of the commodity currencies as well. That's turned around, and the situation is a little different because there might be some easing. There's some speculation that there might be some easing coming from China, some sort of quantitative easing, and that might also be the same thing that is possible coming from Mario Draghi's side of the ECB. Okay, so right now markets are a bit on hold, waiting to see how that all kind of susses out here. All right, let's see. What's the software where you showed the calendar and the news? Oh, okay, yeah, that's Reuters. Zenith is the name of the service from Reuters. It's excellent. I think it's about $100 a month, and yeah, highly recommend it because you can get up-to-date news very quickly from the retail side, and rather unknown or uncommon for us as retail traders to have that kind of access. Okay, and also too, something really nice is that with the Reuters Zenith service, the economic events come out before anyone else, like Forex Factory or any of the kind of web-based, FX Street or FX Daily or whatever it is. This will come out, on the hour when they're supposed to. Okay, so as close as Bloomberg as we can get, more or less. Or the professional services. Let's see, which pairs are more suitable for scalping, and in which session of FX market is best for scalping. Yeah, basically, it just comes back to the plan. Looking for that direction. That's what we can lean on. So we're looking for that fundamental direction and having a bias in that. And then we're sticking with that direction and only going that direction. So now we're just looking for pullbacks. Okay, that could happen in any of the sessions, but it really depends on the pair and the situation. Okay, let's see. Question here from Imma. Small pips should be compensated with higher lot size for significant profits. What lot size are you doing scalping? Well, that comes down to your capital management, and it depends on how much you're willing to risk, how that fits into your whole capital management system. Yes, it is true that you're not gaining a lot, but also you're taking a lot more trades as well. So you're looking to gain maybe 5, 10, 15 points, and that can add up quite nicely. Whereas if you're waiting for excellent opportunity, that's going to happen maybe 2 or 3 times a week. Okay, so those excellent setups you have to be a lot more patient for. Whereas the scalping, you're looking for something that's as high probability as you can get, and then to just pull some points out of the market. Okay. All right. Forex Scal. Market didn't quite like the ADP number a few minutes ago. Well, I can't see the market right now, but yeah, it sounds doesn't sound good. So yeah, you can definitely put that into the strategy there for Xcal. Let's see. Do you set stops and take profits automatically at fixed pip ranges? Yeah, this is a good question. Yeah, definitely have your stop set, and you're looking for just a couple points below some of those trend lines, so that maybe some of the slop in the price action doesn't take you out immediately. But again, it comes back to your risk reward, and what you think you can get out of the market based on that risk reward. And this is where it's very challenging. You really need to be very disciplined, very on top of it, and very unemotional. Okay. Let's see, Nico. Wow, you've scalped about 200 lots before, and you tend to get slipped. Okay. Yeah, I even using 50 lots or less. Does this happen to the bank scalpers? No, not really. I mean, they're getting direct feeds. So, any kind of slippage is very, very minimal. And I mean, they're right there. I mean, they have a direct connection, right? So that's a massive advantage for them compared to us as retail traders. And that makes it much more intriguing to job the market from the professional side as compared to the retail side. All right. Is scalping gambling? It can be. You're looking to if you can get the fundamentals on your side in that clear direction, then it's a lot less gambling. It's a lot higher probability. And now you're just looking for those precise entry points off of the technicals. Okay. FX Bookie. Let's see. Nico, is it wise to use third-party price feeds? Yeah, I mean, instead of broker feeds, I would definitely look into that. Try to get prime brokerage, Nico. Try to get the best fees that you can. With that kind of size that you're trading there, you should be able to get that, and they'd be happy to do that because your volume. And can you mention any decent FX brokers? No, I cannot. That's rule set up by the NFA and CFTC. No recommendations. So sorry about that. All right. So I think that rounds it out there. If there's no more questions, then let's see. You guys have another webinar in another 20 minutes or so, and keep the scalping train alive here, right? Okay. Okay. All right, guys. Well, yeah, a good session, and yeah, hope you enjoy the rest of the sessions here, and we'll see you again another time. Okay. All right, guys. Bye-bye.